Funding for Market Journal is provided by the Nebraska Corn Board.
When we transform Nebraska corn into ethanol, it doesn't disappear from the food supply. It just takes a little detour. Ethanol is made from the starch. The rest of the corn becomes livestock feed to create meat and dairy products, corn oil, sweetener, and other food ingredients, and maybe a little carbon dioxide to make your soft drinks fizzy. Homegrown ethanol helps satisfy America's hunger for energy and the world's appetite for feed and food. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, John Meuret looks at corn and soybean prices. David Widmar analyzes the USDA's farm income forecast. Seth Naeve talks about soybean production in a tight margin year. And Chad Engle explains how the U.S. MARC uses cover crops for grazing. John Meuret from Meuret Grain Company is our corn and soybean market analyst this week. The U.S. Department of Agriculture's monthly supply and demand estimates released Thursday showed no changes to American soybean supply or use. The agency did lower U.S. corn ending stocks, thanks in part to a 25 million bushel increase in ethanol use. The notable change overseas came in Argentina, where the USDA reduced soybean production from 57 million metric tons to 55.5. John joined us Tuesday afternoon before the report was released. We began by asking for his analysis of recent movements in corn and soybean prices.
You know, they've been choppy, Jeff. We can't seem to get definition and go one direction or the other. So last Monday we opened up and beans tried to break hard, corn maybe follows through, and it lasted one day. So you came back in Tuesday and felt a little better. So choppy, I guess that's long and short of it.
Well, tell me what's happening down in South America.
You know, the crop has stabilized. Argentina had some flooding problems. Wild estimates were thrown around the last 3 weeks and 4 weeks, and we've since stabilized that. Weather's better, the flooding has ended, timely rains and heat have come back. So I think we've went from fear to back to stabilizing crops. But yet the market doesn't want to shed that risk premium just yet. So
what does John Meuret expect for production?
I don't think we're going to see Argentina dip down much below the 55 million metric tons. That's a small enough bean crop for what's going to be harvested around there. But they've got a lot of growing season yet too. So today that's my number. We'll have to adjust it and see how the crop finishes off. Brazil, Jeff, switching gears on you, is getting bigger every day. So I think it's bigger than 105 for the soybean crop, and that's massive.
As we talk about U.S. exports, what does that mean for the U.S. game?
Well, it should mean we have smaller exports once they start harvesting. Brazil's harvesting, as you know. They've got a nice boat lineup. They'll continue to do that. We're going to continue to see them take more and more of our export market away from us. And so they'll take that until it's time for their corn harvest to come off, and then we'll take some of the tail end back off. But if China's buying South America, we're going to have opportunities to fill in elsewhere. So we're going to still export soybeans. We need to. I mean, our export number is 2 billion. So to get close to that, we have to maintain an active pace the whole marketing year.
Describe the production first for ethanol and then its profitability.
Well, production's been fabulous. In fact, we're breaking records nearly every week in production. Profitability has stayed really strong. A week ago or 10 days ago, it took a little dip. December was record-breaking both in production and in profit in a lot of cases. And January looks to be smaller, which is very seasonal, but it's rebounded. You know, we see it come back to life yesterday, and today it's even a little better. So, you know, oil and gas have stayed flat, but ethanol has been really good.
If you look at corn and soybean basis, it varies a lot across Nebraska. Tell me what it is like up in that area.
It has stayed really weak, Jeff. I mean, we can't seem to get life underneath that thing, and part of it is the supply that we had. You know, we had record crops, and you can drive around and you can see the piles. The second part is limited export demand today. So we've had a horrible winter between Nebraska, Montana, North Dakota, all the way to the West Coast. And so the PNW, Pacific Northwest, is incredibly snarled up. And so the railroad has done a good job trying to dig out, but they're still paying for some of the sins of a big winter. They had an avalanche yesterday in Montana, and that higher car cost is keeping basis levels somewhat suppressed. So,
how much corn or soybeans have moved here in 2016?
I think that's the second thing, and that's the same basis conversation, is that the farmers moved a lot of grain. And the stuff that was in the elevator in the commercial hands at harvest through the end of the year is now owned by the elevator. So the farmer has done some moving. He's got a lot more to move, but what has moved is transfer ownership. So
when we get that USDA report at the end of March talking about planted acres, what are your expectations?
We're going to see an overall bigger pie. So we know that corn and bean acreage are going to steal some from wheat that wasn't planted last fall. We know that the bean acres are going to be bigger. 3 or 4 million acres is my guess nationwide. And the corn's probably not going to drop as much as most people think. So we were 94 a year ago. We're probably still going to have something with a 9 in front of it for corn. So if we pick up 4 million bean acres and we don't quite lose 4 on the corn, that makes a lot of sense to me.
Next week, Iowa State Extension livestock economist Lee Schultz will join us to look at hog markets. As net income continues to fall on the farm, the U.S. Department of Agriculture expects the debt-to-asset ratio in 2017 will be the highest since 2002. In its first calendar year forecast released Tuesday, the agency projects U.S. net farm income will slide for the 4th year in a row and sit 9% lower than 2016. The mark of $62.3 billion would be nearly half the record farmers set in 2013. The USDA sees 2017 receipts from cattle and calves down about 7%, while those from wheat could plunge almost 17%. Cash receipts from corn and soybeans are both expected to be closer to 2016's numbers. Purdue University ag economist David Widmar joined us Wednesday to dissect the financial indicators. We started by asking for his thoughts on the net farm income prediction.
Yeah, the USDA released its first look at 2017 yesterday, as they talked about the net farm income declining again for a 4th year. And it's important to keep in mind that this has been a big slide in net farm income. And when we go back to 2013, the decline is about 50% from the peak down to more than $62 billion in net farm income. So it's been a big adjustment in the rural ag economy.
Total farm debt, David, increased another 5%. Can you explain where that's coming from?
Yeah, so given the tight margins that producers are facing and the declining income, they're tapping into debt more. They're using more debt for operating lines of credit, for servicing or buying new equipment, replacing equipment, and land purchases as well. So this is part of the concerning trend that we see, declining income but rising debt. That's making it more difficult for producers to service debt. And so when we look at like ratios, like the debt service ratio, that trended higher with this latest results from the USDA.
That real estate debt, it's at a nominal high. Is that alarming at all?
Yeah, so when we look at real estate debt, it is at a nominal high. But when we look at this in inflation-adjusted terms, we haven't seen that really peak prior to the levels that we saw back in the 1970s or 1980s. So we see that growing. It is concerning given that we see net farm income declining, but it's important to keep that in mind relative to where we saw in inflation-adjusted values back in the 70s and 80s.
When you look at the level of debt to assets, is it at a level where it causes concern?
Yeah, debt to asset ratio is one of those most popular, I guess, cited ratios when we talk about the health of the U.S. farm sector. And it's actually a pretty difficult measure to keep in store. It's trended higher in 2017 based on the latest results. It's important to keep in mind we're at really low levels of debt, historically lows from the boom period. So we've got a lot of wiggle room before we get to those concerning levels. Like I mentioned earlier, it's really the debt service ratio that's more concerning right now than, say, debt to asset. But debt to asset's also tricky when we think about how few farmers use debt. I think the number is 1.4 million out of the 2.2 million farmers don't use debt. So this is kind of a tricky measure to really use as a true gauge of the health of the farm economy.
What level is alarming beyond that?
So back in the early 1980s, we hit a high of 22%. Of course, that's sector level. And when we look at the data kind of back to the 1920s, we see that about 17% is the 75th percentile. So Anytime we're below that 75th percentile, that means 75% of the data points were below 17%. Right now, we're just hitting that 25th percentile. So it's still on a historically low basis. But like I mentioned, it's a pretty tricky measure to really use just because so few farms actually have debt. We're actually concerned about the concentration of debt in some of the larger operations and high gross farm sales operators.
You can learn more from David and Brent Gloy on their website at ageconomist.com. That includes an analysis of why soybeans might not be a clear profit margin winner against corn this season. Illinois and Iowa are the top two soybean producers in the United States. In third place sits Minnesota, thanks to a then record crop in 2015 and an even larger output last year. The state's average yield reached 50 bushels an acre for the first time in 2015 and was even better in 2016. Seth Naeve is an extension agronomist at the University of Minnesota and focuses heavily on soybeans. We talked with him at a Nebraska Extension crop management conference in Kearney recently about production strategies for soybean growers and whether or not those tactics should change in a tight margin year like 2017.
Well, it is a little bit different. We're, certainly watching overall, just because of the lower prices in general compared to a few years ago, we're really watching our inputs. And I think the benefit of having that big run up in prices was the fact that farmers were able to look at a lot of things to increase soybean yields. And now I'm basically trying to help determine and help farmers choose things to get rid of and reduce their overall inputs into their farming operations.
Describe some of those inputs and what you might be able to either do without or back off of.
Well, our research, we did a national study back a few years ago looking at kind of a kitchen sink approach to adding everything onto that soybean crop collectively and then individually. And I would kind of pool things into two groups, these kind of yield enhancing products, those that are marketed to farmers to really increase soybean yields, and kind of yield protectants that are kind of our classic pesticides. And our research really indicates that these yield promoting things, these magical products, we really have a hard time finding any value in any of those products at all. The things that provided us the most value were real actual pesticides that had activity on specific pests. So seed treatments, fungicide, insecticides worked a little bit for us. Foliar fungicides occasionally, and foliar insecticides was really the big bang for the buck, primarily because they're cheap, but also they have a big activity when we do have insects. So controlling real life pests is really the most critical thing.
What impact did you find on yield and also yield to price relationship?
Yeah, so the whole study was focused on this kind of kip colors, this 150, at the time, 150 bushel soybean yields. We put $170 an acre of products down and we were able to get 4 bushels out of it. So not exactly what we had hoped for in terms of that kind of kitchen sink approach. We could increase yields with these multiple products, and we were getting a little bit from each probably individual one, but the economic returns of these multiple products wasn't there. So again, we come back and look at them individually, and it really looks like individually you get down to kind of those insecticide, fungicide options.
Can you speak to planting population in Minnesota, a state that varies, I have to imagine, a lot from north to south?
Well, I think even more so than the state itself, planting population varies by farmer. And I couldn't ever understand this because we did surveys 10, 15 years ago where we saw these seeding rates from 100 to 250,000. We didn't understand where this was coming from. But when we apply economics to our big data sets on populations, we see that higher planting populations tend to be a little bit more stable for yield. So we get a couple bushels out of planting an extra half a bushel of seed. And when you run the economics on it, the return is basically flat across planting rates from 125 to 185,000. And I think that it's just a good explanation of why, again, kind of retrospectively, of why farmers are doing what they're doing. Those that are more conservative in terms of seeding rates, they can get by just fine. But they may have a couple acres that are a little bit deficient, and they may lose a couple bushels over their whole farm, whereas those that invest more are ensured that they have 100% yield potential across all their acres. So I used to be really big on pinpointing specific populations, and I've just decided that it's just based on what farmers are comfortable with.
You do work at Minnesota about soybean quality as well,
Yes.
looking at customers and what they want. Explain to me a little bit of background on that work.
Well, we've been doing a survey of the U.S. crop, so a lot of farmers from the area probably send a sample to us every year. We analyze it in our lab, and then I take it to Asia in November and meet with buyers and tell them about the new crop of U.S. soybeans. Then subsequently, I've been working a lot on more specific northern and northwestern corn belt issues around quality, where we tend to have lower protein levels, and also where our soybeans tend to be exported off of the Pacific Northwest into Asia. Those soybeans tend to be lower in protein, and they're discriminated against in the global market. So they're getting a lower price at destination, and that tracks all the way back to the farmer. So that's part of our broad basis that we have here is a quality basis. It's hidden, but we're definitely penalized at the farm level because of it. So we're trying to educate end users about other intrinsic value within that soybean.
Is it enough where we're going to see eventually buyers requesting that suppliers do something differently, and therefore farmers actually that do something differently?
And that's our ultimate goal, I think. As part of this, the problem with the whole trade is that this quality thing gets a little bit, it's opaque, so it disappears from the system, and we're pushing these soybeans through. Somebody might be capturing value at some stage along the line, but then that's not coming back to the farmer level. So we're trying to provide a little bit more openness all the way through the trade, so that we could get the right soybean in the hands of the right end users, and that they'll pay more for it, and that will ultimately follow all the way back to the grower. We're not looking for penalties at the elevator for farmers because of amino acid differences or anything like this, but if we can demonstrate value, maybe we can target certain soybeans from regions to certain markets. And then ultimately, the seed companies are going to see more value in this too, and start really working for farmers, because they've just been breeding for yield so far.
Next week, we'll have more from the recent conference as we'll discuss precision ag technologies with Purdue Extension corn specialist Bob Nielsen. The Nebraska On-Farm Research Network will hold its 2017 annual results update meetings at 5 locations in the state from February 20th to the 27th. The network pairs growers with Nebraska Extension personnel who help conduct trials on farmers' operations. Nebraska Extension's Laura Thompson says February's events will give producers information about those farm-level trials.
The on-farm research meetings are a really great opportunity to learn about a wide variety of research topics. We've had about 70 on-farm research studies conducted this last season. Those range from a wide variety of topics to different products and practices to innovative technologies that we've been looking into. Things like cover crops, seed treatments to look at things like sudden death syndrome in soybeans, and different nitrogen management practices using crop canopy sensors to direct in-season nitrogen management, and looking at models that can be used to help direct our in-season nitrogen management. So some really innovative technologies there.
The Nebraska On-Farm Research Network is sponsored in part by the Nebraska Corn Board. You can find more information about the 2017 annual results update meetings at cropwatch.unl.edu/farmresearch. We've talked before about how livestock producers can use cover crops as a grazing option. That forage alternative is part of the research conducted at the U.S. Meat Animal Research Center. Located near Clay Center, Nebraska, the U.S. MARC works with the University of Nebraska and other land-grant universities to further study cattle, swine, and sheep production. We recently talked with U.S. MARC's Chad Engle to learn more about how the center is using cover crops in its beef operation.
You know, I think we've probably used cover crops in just about every way that you can, from a cow-calf and feedlot perspective, actually. We've grazed calves that intended to feed out on there. We've used oats, turnips, radishes in a mix like that for stocker steers and looked at their gains on that. We've done a lot of that in collaboration with UNL. We're doing heifer development on cover crops now in a combination with corn stock grazing, some supplementation strategies associated with those. And then we've done it with cows. Pregnant, dry spring cows, lactating fall cows during the breeding season. And pretty much any other time of the year. We've done it spring, summer, fall, even well into the winter.
Why, Chad? What's the goal here?
The goal is always to reduce carrying costs. And it's also, the great thing about cover crops is there's a soil health component associated with that we can really take advantage of. Those brassicas in terms of soil compaction, always having a living root in that soil has been shown countless times to be very beneficial. And so we can benefit the soil, we can lower our carrying costs for our cow herd, we can be better resources of our land. It can be really a win-win.
If you're growing cover crops, what's the timeline for putting animals on and then taking them back off?
Great question. There's a lot of different ways that you can do that. In the spring, you might be grazing something like cereal rye, or in our case, a lot of times triticale. And triticale, you want to get on that early. You typically will plant that in the fall. Sometimes you can get fall and spring grazing, but our goal is usually spring. And when you think it's too early to go on there, it's probably not. Because triticale, I can remember a very specific example. One of the first times we planted triticale, we all went out on Friday afternoon and we said, yep, it'll be perfect on Monday. And we come back on Monday and it's 8 inches tall, and we're behind. And so it's a learning process. You go after those things with a lot of stock density. We try to get really good harvest efficiency by doing rotational grazing even on those cover crops and moving cows every couple of days, sometimes every day. In the fall, the longer you can let that stuff grow, the more forage you're going to have out there to go graze. And you can graze cover crops long after they're dormant, long after from the road they don't look very good. There's still a lot of stuff to go get out there. And so we've taken advantage of both systems.
And you said you're using them in the feedlot as well?
So we've looked at steer development outside of the feed yard, stocker development. And one of the things that we've done is looking at, we did a study, and again, this was with UNL, where we took and did the 3 different types. We developed steers in the feedlot, like a traditional calf-fed type situation, on corn stalks, and then on the oats, turnips, or radishes cover crop mix. And then we've compared carcass data, feedlot performance on all 3s, and then there's an economic component to that too.
Tell me about the performance you're seeing.
It's kind of some of the stuff that you would expect to see. We were getting 1.5 to 2.5 pounds a day, average daily gain on the cover crops, which we kind of expected. It's very much weather dependent. We had some years where it was outstanding and some other years where the climate and such was a little tougher. What we are seeing is really good compensatory gain on those steers when they get into the feed yard. In other words, when we're on the cover crop, putting a lot of frame on those cattle. And a lot of capacity to eat and gain when they get to the feed yard, which is where I think the cover crop development part really has some advantages.
So Chad, if a producer is looking to use cover crops for grazing, hasn't done it before, what advice would you give them?
Be flexible, have a backup plan. There's always a risk when you're talking about planting a cover crop in terms of a cow feed resource. It's less of a risk with irrigation, but there's still a risk. So I would advise to have a backup plan. I would say in the fall, planting date is paramount. You can almost measure it on a graph the next day that you're too late, the terms of decreased forage that's going to be there. I would say have a plan for mud. We've run into all kinds of situations. We're going to plant this right after silage harvest and it rains 3 inches. Now what do you do? So I guess I wouldn't throw all my eggs in that basket. The first time I did it, I'd have a plan. I would start small, but definitely don't be afraid of it because the opportunities are tremendous with this resource.
Now with this week's weather forecast, here's Nebraska Extension ag climatologist Al Dutcher.
Well, folks, here again for the weekly forecast. And during this last week, the major weather event was the system that moved through the state on Tuesday night and then exited the state Wednesday. We did see some accumulating snowfall across northern Nebraska. We've had reports anywhere from 3 to upwards of 7 inches of snowfall. The 7 inches was closer to the South Dakota-Nebraska border. But as you move to the south, we see the precipitation totals drop off rather significantly. So we only had a couple inches around the Omaha metro area. And then as we got to the I-80 corridor, basically a skiff of snow to upwards of an inch depending on location, and once we got south of Interstate 80, very little in the way of significant snowfall. So for the season now, we've actually went above normal across the northern 1/3 of the state for snowfall. The center third of the state anywhere from about 50% of normal snowfall to near normal, and then as we get the southern 1/3 of the state, looking at about 25 to 30% of normal snowfall. So we are basically in a snow deficit, although precipitation is above normal for the last 2 months. Basically, is a function of the temperatures just not cold enough to put it in the form of snowfall. During this next week, we have one system moving through this weekend, and then we looks like we're clear sailing at least through the end of next week, and we will see temperatures that will be slightly above normal, but nothing extreme. So let's get right to the maps, and as we get to the maps, we'll notice that the upper air trough in the southwest will slowly pivot eastward during the week, and then we have this northern stream that is basically going to bring the cold air into our region. So we have a surface low that is going to generate itself over eastern Colorado and quickly move toward the northeast over the next 24 hours. So here you see the precipitation shield with that upper air low, and as the system on Sunday basically moves into the Great Lakes region, we will see the precipitation shield also with this system generate some pretty significant snowfall over the Great Lakes in the northeast. And here's the upper air low with the precipitation moving into western Texas. Here's our system that's moving off to the northeast, and it's going to have a good fetch of snow, so we're going to have some lake effect systems, and then upper air low will generate itself some very significant precipitation over the northeast. We will be under the influence of high pressure system that will build in and keep this low to the south of us and force it over the eastern seaboard. So we're going to get some welcome rainfall in Texas, but the main cold air will remain to our northeast, and we're going to be caught between the two systems. So we'll see some surface lows as we get into Tuesday, but these will not move into our region. They're basically pivoting around this upper air low and will generate some significant thunderstorm activity in eastern Texas. And then that system will move on Wednesday into the lower Gulf region, and we have the cold air well to the north. Both of these look like they're going to combine as we get the system moving off the eastern seaboard to generate a pretty significant snowfall event. Precipitation may be a little excessive on the northern periphery, but definitely along the Gulf Coast we'll see heavy precipitation. And then everything merges into a big trough. Arctic air pulls into the region. We'll see snowfall as that system moves up the eastern seaboard. In our region, we're looking at nothing in the way of any significant moisture. You can see we're pretty much dry during this period with yet another major storm system coming into the Pacific Northwest. So we'll see ridging as we go to the end of the week, building into our region some very warm conditions, but we'll pay attention to these surface lows that will start to move precipitation out into our region. So if we look from next Thursday to the following Tuesday, with that high pressure system pushing to the east, very warm conditions into our region. And in terms of precipitation, we're looking at that flow of moisture coming in from the Pacific Northwest and Southern California to start making energy into the Central Plains and bring an increasing chance for heavy precipitation as we go through the last 2 weeks of the month.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, U.S. farm income, soybean production in a low-margin year, and grazing cover crops. As always, you can keep up with Market Journal during the week by following us on Twitter, Facebook, and Instagram. Next week, Lee Schultz will look at hog exports in 2016, and Purdue Extension corn specialist Bob Nielsen will discuss precision ag technologies. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.